Hey, happy Friday. It's the last Friday of the month. There are a couple of things that we should all pay attention to. Well, primarily is the latest inflation data and also the upcoming tariffs to be implemented by the Trump administration. So it will impact like whether we are everyday Joe or especially if we are investor in the stock markets or investor, builder, and developer in the real estate market. The latest PCE data released this morning, which is Personal Consumption Expenditure, a lagging economic indicator on inflation. If you're not familiar with PCE, check out my other YouTube video in which I explain what PCE is and how it affects the economy, inflation, and also the interest rates decision. Now, the latest one is showing that for the month of December, the headline PCE is up 0.3% month over month and 2.6% year over year. The core PCE, which is excluding food and energy costs, is up 0.2% month over month and 2.8% year over year. And if we look at the 3 months and 6 months annualized average, it's lower than the 12 months, which is good news. So it's lower inflation. However, the concern is that when we look at the trend, in the past 4 months, the year over year PCE number is actually trending up. So that's the concern area. As the year over year PCE number is what the Federal Reserve looking at in order to determine the level of inflation and also certainly part of the consideration in their decision on interest rates. So given the PCE data showing that inflation is remaining at this level, not going down to the ultimate target of 2%, and also the likelihood of the upcoming import tariffs implemented by the Trump administration. So the Fed pretty much held their interest rates this week, and also the likelihood for the Fed to cut rates in the upcoming or next meeting in March is not very high. So the chance for US dollars to remain very strong, especially relative to other currency like the euro, ECB cut rates another 25 basis points earlier this week, and also the Bank of Canada did the same on Canadian dollars. So the US dollars will remain strong. So for investor, we may want to consider how a strong US dollars may impact some of the businesses, especially those who relying heavily on export to other countries, and how a strong US dollars and the exchange rates may negatively impact their bottom line earnings. Now on tariffs, how likely will the Trump administration go ahead with the blanket 25% of tariffs on all imports from Canada and Mexico by tomorrow, February 1st? Well, as of this afternoon, Friday afternoon, the White House reiterated that they will go ahead with the tariffs. So who knows what's going to happen? All these things are so dynamic, may change at any moment. But how will this impact everyday life in the US, in Canada, and Mexico, and in fact, in the rest of the world? Well, let's take a look at some of the number here. Well, Canada and US are the largest trading partners in the world. Well, annually, the goods and services that change hands between the two countries are like north of $922 billion, and of which the deficit from the US side is about $40 billion. Wow, far from the $270 billion of deficits stated by President Trump. So exactly what are the top import goods from Canada? Of all the products that the US imports from Canada, top the list are crude oil, gas, vehicle, auto parts, and also lumber for construction and foods as well. So why would the US import so much crude oil from Canada? And in fact, if we take away the crude oil from Canada, mostly from Alberta, the US is actually enjoying a trade surplus of $58 billion, not a deficit of $40 billion. Okay, so why would the US want to continue to import the Canadian oil? Well, the Canadian oil certainly provide many benefits to the US economically, politically, and also to address their energy securities. And of the 20 million barrel per day of oil consumption in the US, the average oil consumption is about 20 million barrels per day, of which about 13 million barrels are self-produced in the US, while the remaining about 7 million barrels are from other countries, imported primarily from Canada, which account for almost half, roughly about 45% of all the oil imports. And the remaining are from Saudi Arabia and also other countries as well. So why would the US import mostly Canadian oil? In fact, in 2023, Canadian oil export to the US total to about $127 billion, and it certainly have a huge positive impact on the Canadian economy, but also the economic impact on the US economy is also very positive as well. The main reasons are, well, the US actually is buying Canadian oil at a significant discount, and thus address Trump's objective in terms of keeping energy costs low as well. And also the heavy crude from Canada is actually can also act as a feedstocks to many other petrochemical and also hydrocarbon-based products such as plastic. So Canadian oil actually is supplied to like more than 500 US refinery, manufacturing, petrochemical plant, and create like close to 1 million employment opportunity. And the economic results, the upgrading, the value add is way above the $127 billion that they spend on buying Canadian oils. And also, politically, Canada has been a good ally of the US and share the same political ideology. So it's a very good, reliable partner and addressing the energy security, supply security as well. In fact, by importing cheaper Canadian oil, it enabled the US to also export some of their higher quality, lighter oil from Texas. So it's certainly a win-win for everyone. Now, as for Mexico, also they're a big trading partner with the US as well. Top of the list of all the products Mexico export to the US, that's including vehicle, auto parts, electronic appliances, also crude oil, as well as foods and also beers. In fact, of all the foods imported by the US from outside, Canada and Mexico accounts for a total of 40% of this import foods. So given today's environment, I think most of the businesses are already operating at a very competitive environment. So I don't think these businesses are able to absorb all those tariffs as part of their costs. It's very likely to pass them on to consumer, which means higher prices on everything, gasoline, food, grocery, and other consumer products as well, as Canadian and Mexican government will likely be also applying tariff on American goods as well. So it would certainly send the economy to the opposite direction and may lead to higher unemployment and business slowdown, etc. Certainly, these tariffs will be a big blow on the Canadian and Mexican economy. It would also impact U.S. economy and consumer as well. So how likely will the Trump administration go ahead with these tariffs? Well, let's take a look at what President Trump wants to achieve with these tariffs. Well, number one, I think he wants to address the national trade deficits. Currently, the U.S. is experiencing about $78 to $80 billion of trade deficits, through all the trades with like other countries globally. So by applying these tariffs, hopefully he will achieve a little bit more of a balance and hopefully in surplus as well in terms of trading with other countries. So he want to start with the Canada and Mexico, the two largest and also closest trading partners, and sending a strong signal to the rest of the world and whether they are friends or foes. And look, this is what I'm going to be doing to even the closest trading partners. So watch out, and tariffs is coming. So, and the second part is that currently the US government is carrying about like $36 trillion of national debt. And also Trump promised a tax cut for businesses and also individual income tax as well. And how can he increase government revenue at the same time? Well, tariffs is another ways of increase the government revenue. But for people who see through all this, and they will realize that it's just another way taxing direct import goods, and all that cost will be eventually paid by consumer. So it's just a different way of getting money and revenue for the government, if not directly from income tax. So based on observation from Trump's first term, we all know that Trump liked to use tariff as a bargaining chips in order to get what he wants in other non-economic area and using it as his negotiation position. So whether he will start with 25% and then lower it along the negotiation as concessions are made, or he will start with something lower and then tighten it and ramp it up. If he doesn't get what he wants, no one knows. But I think it is very likely that we will end up with tariffs somewhere lower than 25%. And the impact, the effect will certainly be felt by everyone, not only in the US, Canada, and Mexico, but the rest of the world as well. Well, as for investor, what should we consider or pay attention to? Well, the current stock market is pretty much priced for almost perfect scenario, right? Strong economy, strong employment, 2 to 3 interest rates cuts by the Fed, and also continuous growth in corporate revenue and earnings, improving productivities by technology and AI and all those. If anything that is less than perfect happen, it will certainly impact the market. If tariffs lead to higher inflation, there are fewer or no rate cuts this year, which send the market running for cover. So we need to be careful about that. And as for real estate investor, developer, and builders, we should also consider all these elements as well. How these tariffs would impact the economy and how it would impact the labor market, wages, unemployment rate, and also both the U.S. and Canada also taking a turn on their immigration policy as well. How would that impact the housing demand and all that? And also building materials such as lumbers are one of the item on top of the list. With the tariffs, it would certainly drive up the price as well. And also given the situation in California, going down the road, all that we build will also impact all the building material price and also the demand on construction labor as well. So all those should be considered, which will affect the housing, the construction, and the real estate market. So there are lots of moving parts and it can be very confusing. So investor may somehow feel a bit lost in terms of direction, a lot of uncertainty, and that's very normal. And I would say that if we stick with the fundamental principle in investing, whether it's in the stock markets or in real estate, use bottom-up or value investing approach. Make sure that the number works in the worst scenario. Okay, look for anti-fragile business that not only survive but also thrive in either good or bad economy or market cycle. And we will eventually come out better than others, ahead of others financially. All right, so regardless of what will happen tomorrow, February 1st, in terms of tariffs, so let's enjoy the weekend. And if you want to learn more about the Warren Buffett style of value investing, learn how to turn news into information that enable us in making decisions in investing. Well, stay tuned for more and join my value investing program. Take care.